The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good morning, all you wonderful money masters and treasure hunters. Welcome to the October 10th wonderful Wednesday edition of today's opening bell on the Trader's Edge. I'm your host, Steve Rhodes, and thanks so much for joining me, folks. I absolutely treasure your presence here today, and my outcome is to help you to become a better money master and to provide you with the tools that will help you to lead an inspired life, because leading an inspired life, folks, that is what it's all about. So let's go take a look at one of our tools. I love this tool. This is the tool that I call, if at first you don't succeed, try again. Now, how many of you out there actually know who came up with that proverb? If at first you don't succeed, try again. Well, believe it or not, it was William Edward Hickson. Of course, most of you probably aren't familiar with him. William Edward Hickson was alive from 1803 to 1852. He was a British writer out there. And the full proverb goes like this. 'Tis a lesson you should heed. Try again. And then, if at first you don't succeed, try again, folks. And that is absolutely a lesson that each of us need out there. You know, Thomas Edison, he joint ventured with a fellow named Joseph Swan. In fact, most people don't know it, but the actual joint venture name of their company was Ediswan. How about that? And the two of them, they patented and they built the incandescent light bulb. Swan was over the pond, just like our friend William Edward Hickson here. You know, and we had Edison on our side of the pond. The two of them, they joint ventured together in order to really create that incandescent light bulb. Now, it would have seemed that that would have been the end of their invention because they had reached their goal. They basically had lit up America, the streets, the schools, the buildings, and everything. And folks would have thought that that would have been the end. But after all, really, folks, when you take a look at what it is that you accomplish in life, and let's take a look at Edison, what further use could there possibly be for electric light? Well, let's take a look at what we have going on. You know, you've got infrared light, you've got halogen lights, you've got fluorescent light, you've got folks that use light to zap out things out of the air. When I say things, bacteria, I should say, out of the air. And those are only a few uses out there. I actually used light in order to start an entire business, in order to create a whole new product that kind of swept across the country, swept across the world. I was using laser light in order to, and I was using red and green laser light in order to be able to create small fractures in transparent materials. Was basically using glass or crystal and creating 3D, 2D images inside glass. I was using light. Thank goodness for Thomas Edison and for Joseph Swan out there. And probably each of you, there's researchers right now today that are searching newer and better ways to be able to use the electric light bulb out there. So really, it never ends out there. 'Tis a lesson we should heed, which oftentimes means this. When you reach a high level of performance, maybe when you reach a breakthrough, maybe when you've attained your goal, maybe you've attained your outcome in life, what you don't want to do is rest on your laurels. To me, that's really what that proverb really means. Don't rest on your laurels out there. Instead, what you want to do is see what's that next level. Where can you take things to? Maybe said another way, success, folks, is not a destination. It's just simply a journey of living, a journey of learning, a journey of bettering ourselves on a continuous and ongoing basis out there, folks. William Hickson, he's credited with the, if at first you don't succeed, try again. And since it's not a destination and it's never to add, to my own personal flair, what I would say is after that, you would just simply say shortly after you do succeed, try again, folks. Winston Churchill, he used to say, never give up. Folks, do not give up on your dreams. Just simply push through everything out there. And let's go take a look at our markets out here. Right now, we've got the Dow futures trading down about 15 points right now. ES Mini, that's the S&P futures. That's what we're looking at here on my screen. If you're watching us on Tiger TV, if you're not, you can go ahead and catch the archive of this show on Channel 9. And if we take a look at the ES Mini trading out right now at 1436.50, basically flat out there. You've got the NASDAQ futures up about 3 points. Russell 2000 basically flat up 70 cents right now. King dollar back, looks like here maybe about a penny. 2 pennies. You've got gold only trading down $2 out at 17.62. Has not given up much of its gains. Silver down 7 cents right now out at 33.91. You've got natural gas out at 3.452 out there. You've got the DAX trading down 5 points. Relatively quiet morning over the pond. You got the FTSE down 13 points. Over in Asia last night, the Nikkei in Japan having a tough day, down nearly 2 percentage points, down 173 points. They closed out at 85.96. The Hang Seng down 17 points, basically unchanged out there. And the Shanghai was up 5, up 0.25%. I would have to say basically unchanged. Our call number, as always, 877-927-6648. Let's go get to the charts out here, and let's go see what these markets are doing. Well, now this is the ES Mini 30-minute chart, so there's some lines here that we can go ahead and get rid of. We were taking a look at really in kind of an ultra short-term rising price trend channel that the ES Mini had been traveling in ever since really the 1st of October. What the importance of this rising price channel is, folks, so that's the red lines that you see out there, is that when you do break through it, in this case here, a real break would be to the downside, not to the upside because you had price moving to the upside. Once you break through it, what's going to happen is going to come back up and it's going to retest that area. It tried retesting it, at about 9 o'clock on October 8th, tried again at about 11 o'clock on October 8th, tried again at about 4 o'clock on October 8th, tried again on the 9th. This is also on the 8th, up until about the midnight time frame. Thought it was going to do it yesterday as well, but no, it gave out right at about 9 o'clock. It was making its high as we were coming on the air at 9 o'clock yesterday, out at the 1453.75 level. Well, then you can take a look at a little short-term trend line, just simply coming out. A difference between a trend line and a channel line. Channel lines, you're identifying co-located opens and closes, and as many as you can get, at least 3 out there. A trend line, a little bit different. Well, if we take a look at the trend line coming off of that same point, the same lows on October 1st, coming in at around the 14.27 level. And then your next touch point here, you could use either one, either the low from 10:30 in the morning on October 3rd, or you could come back into the in essence, the closing session on October 2nd. Either one would have given you the same thing. But you can see that trend line was broken here with conviction at the 11 o'clock hour as the ES Mini traveled all the way down to 1439.50. Did it with some volume out there. So let's go ahead and get rid of those lines out there because those lines are no longer of any real use to us. And let's go draw the other patterns that seem to be appearing out here on the ES Mini. So let's go here was the hammer. There was a little hammer candle out there. Let's go ahead and get rid of this. Now let's go take a look at the ABCD patterns out here. So we're on the ES Mini. There's a couple that we can draw, but we're always going to start here with the same A point. The A point, folks, is where we see a change in trend. Well, that change of trend coming in at about 11 o'clock in the morning on October the 5th out there. Also the 10:30 session. They both look to be about the same, 1466. Let's see here, 1460. Yeah, they're both 1466 as the high. So that's going to be our A point. Without question. Our B point here, I would say, you got a couple different areas that you could draw it to. You could draw it all the way down into the level of about 12 noon on October 8th. But I really think what you ought to do is you ought to draw your B point all the way down here now at 4 in the morning. This was yesterday down at the 1445.50 level. That was your B point. Your C point was the high as we were coming into the program hour here at 9 o'clock yesterday morning. You can see what the ES Mini has done is made a 1-to-1 A to B equals CD. But how did price come off of that C point there? Came off with conviction, and so with conviction, and you got price on the inside of that, the C to D leg. You got price on the inside of that level. What does that mean? Says it still got some power. It certainly was woke, got a good night's sleep. Really didn't do much. There was no real correction down here to speak of in the overnight session. Almost looks similar to this area back in here. That says that the ES Mini, if the market does continue its sell mode that is out there, what we will see is the ES Mini travel down to its next level. I'm glad you asked what that next level is. 1427.67 out there. That would be the 1 to 1.272 area. Not really seeing much in the way of bullish candle configurations. A little one right in here. If you do see the ES Mini close down below the 1432.75 level, that would suggest that the ES Mini wants to travel down down into that 1.272 area. Let's see what else we've got out here. Well, that red line going across there, that is where Uncle Ben is hiding in the weeds, I believe. If we go back there, we take a look at that. That is the September 13th day on the ES Mini. Uncle Ben nowhere to be found yesterday. I suppose he just didn't care much about Apple, because if we take a look at Apple here, we'll switch over to that real quickly. Remember, hammer candles. You want to understand your candles, folks, and you especially want to understand hammer candles. You break that area of support. If you're long, you're wrong. In the case of Apple, we know that it broke the September 12th hammer. It did that on Friday. I believe it was Friday, October 5th, yes, when it closed out at 652.59. You saw Apple yesterday making close to, it depends on what you want to use as your B point out here, very close to making the one-to-one A to B equals CD point. 877-927-6648. Future's relatively unchanged. The King, though, up 2 pennies now. Give us a call, folks. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
80% of traders fail because they don't know when to get in or out of a market, and all because no one taught them how to read the signs. You see, the stock market has a universal language called Japanese candlesticks, and each day, the buyers and sellers, the bulls and bears, go to work and build signs. This language has been around for thousands of years, and it's easy to learn. I'm Steve Rhodes, co-host of the Money Masters Show, and I'm a master sign builder. Download my free report, Candlesticks, The Speed of Trust, on the homepage of TFNN.com for one of the best-kept candlestick secrets. I'll also be conducting an online course Friday, October 19th, to teach you the language of the market's sign builders. You'll learn the best entry and exit techniques and strategies that will create extraordinary rewards. The course will be archived so you can review it as many times as you like, because trading or investing without learning this language is like running a red light. It's an accident waiting to happen, and there's no airbags or seatbelts. All the details are on the homepage of TFNN.com.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go take a look at some of the stocks here in the pre-market earnings season, officially kicking off yesterday with Alcoa. AA's their ticker symbol down about 9 pennies right now. That's about about 1% out there. The stock closed at $9.13, so trading just under $9 right now. You had Yum Brands come out with numbers. They closed at $66.04. They are trading up 5% this morning, up $3 and change. So let's go take a look at that. I should have the actual number here. I need to add that to my system here. But they're trading up $3, so that's going to be $69. Now, if we take a look at Yum Brands had quite a downdraft on June the 1st out there. The high was 68.43. Where that gap began was on May 31st, the session before, 70.96. That's what it's going to run into. We'll see what kind of volume Yum Brands has in it, but really this thing here has been traveling in a sideways consolidation. It will need volume exceeding 13 million to really take out that area with any kind of conviction. Not really a bad-looking stock chart out here. It's really its first sign of any type of weakness here. You can see the sign of strength. The most recent sign of strength here came in on this high volume day of February the 7th when you had 13 million shares. Now, wasn't wide price spread out there. You did have accelerated volume, but you can see that that fund appears to still be still be in the picture out here, because that's what really looks like it supported it on the way down on June the 1st out here. So been traveling sideways. We'll see if Yum Brands is going to go ahead and take out the swing point area or take out the, totally, well, it's going to gap up this morning. So with the gapping up is also suggesting that really Yum Brands more in a sideways trading range out there. Again, trading out right now up $3.56. If we take a look at before the bell here this morning, we had Costco come out with numbers. COST is their ticker symbol. I love that store, folks. $99.64 is what they closed at. Let's go ahead and put the stock chart up on the screen here. I believe they're out near their all-time highs out here. They traded down yesterday, traded down with some volume there, but of course you had a market that was moving down. If we pull this back here, look at Costco. Let me put this on the monthly basis just to make sure. But Costco trading up near its highs. A nice looking stock chart out there with the exception of the volume out here on a monthly basis, which is all the way back on July 31st of 2008 at the $74 level, straight at $99.64. Costco is going to go ahead and move higher this morning. And let's go see what it needs to attack. The swing point is going to be out on September 21st. That has 3.2 million shares. The high is 103.51. Costco closed at $99, $99.60, trading up $2.50. That'll take it to $102, $103.51. So it's going to try to tackle that swing point from September 21st out here. If we take a look at this stock chart, not really much in the way of institutional selling in this equity here at all. Even yesterday's downdraft, not much of a downdraft, we'll call it a pullback. 1.6 million shares coming into the swing point from October 3rd with 2.7 million shares. It is going to jettison out of that area here as it opens. You had, let's see, Progressive Corp, PGR, they're trading up 1 3/10%. Host Hotels, at Costco, let's go back to Costco. Let me see here. They had saying comparable stores for Q4 were up 6%. International comps were up 2%. So that's a beauty out there. Their net sales, $97 billion versus $87 billion out there. So that is nice. Let's take a look at the income. Where's income? Down here. Come on, where is my net income? Net income, $609 million versus $478. Running a top-notch organization out there for sure. Let's go take a look at Host Hotels. HST is the ticker symbol. And as we take a look at Host Hotels, that is trading up about 3.5%. Closed at $15.53 last night. Let's go take a look at this stock chart here. So they're trading up a total of 54 cents. So they're going to be at the $16 mark here. And $16 is really not going to be doing a whole lot here. Now, the stock chart really been consolidating. So Host, if you go back and you take a look at this, really been consolidating all the way back to October 25th, 2011. The bottom of that range really being in the, let's call it the $14 area, $13.99 was the swing point from July 25th. And the top of the range out here, the most recent highs, we'll call that the September 14th level out at $17.50. That is on Host International. When we come back, when we see how these markets open, we're also going to go take a look at the euro. We'll follow up on that Gartley sell pattern on the euro yesterday and the ultimate outcome. And let's go see what it did out there. 877-927-6648. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of tfnn.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of tfnn.com, and for more information on Great Panther Silver, you can click on their banner on the front page of tfnn.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Off to the races. We got the Dow down 17 points right now. S&P not out of the gate, totally flat here. Composite down a point. Russell 2000 hanging out with the S&P, basically flat right now, up 50 cents here. Microsoft down 8 ticks. Intel off a penny. Google trading down 20 cents right now. Cisco off 7 pennies. Apple, though, up $3 and change. If we take a look at what's popping and dropping in the markets, you've got Yum Brands leading the charge, up $5 and change, up 8%. You've got Apple then next, dollar-wise on the way up, $3 and change. Actually, True Religions, the jeans company, TRLG, having a nice morning here. They're up $4.70. FedEx said something about slashing costs. True Religion's actually up 22%. Let's go see if there's some news behind the move out here in True Religion out here. I didn't see them releasing numbers, but I could be wrong. Let's see. Yeah, I don't see anything in the news out there. We'll take a look at that stock chart. Costco up $2 and change. Rackspace, RAX, is the ticker symbol there, up about 2.5% this morning, up $1.75. Abercrombie and Fitch, ANF, the ticker symbol, up $1. Kulik Industries or Technologies, QLIK, up this morning, up $1. So Williams and Sonoma, WSM, is the ticker symbol. They're up a full $1. If we take a look at things popping to the downside, Cummins Inc., CMI, down about almost 3%. Chevron also down about 2.5%, down $2.70. AVT, Avnet Inc., off 240. Monster Beverage, I believe, being downgraded this morning. MNST down about 3.5%. Aero Electronics, perhaps, ARW, off 6% this morning. Wabco Holdings, WBC, off $1.40. Off $2, down 3.5%. And Viacom closing things out to the downside here. Not that there aren't more stocks selling to the downside. Actually, I'll mention OCZ Technology. They're down $1.10. That's down 34% this morning. I believe they're coming out with numbers after the bell, but it is trading off this morning. Wonder if somebody knows something here. Let me see. OCD warns revenue below estimates. So I do believe that they were supposed to, their calendar to release numbers after the bell. I don't see anything out here. Let's go switch over here to the euro. Let's go take a look at that 30-minute chart. Just to follow up from yesterday's chart here, we were taking a look at the 10-minute. Now, this was a 10-minute chart. We're just simply taking a look at a really nice Gartley sell pattern here that had set up. Nice. Why do I say nice? Well, one of the reasons why I say nice is because you had the completion of an A to B equals CD. You had beautiful sacred geometry, so it's nice to go ahead and study this on an intraday chart. It works the same no matter what time frame, whether it's weekly, monthly, daily, 10-minute, 30-minute. You're looking for these patterns out here. If we do take a look at the euro, what the euro did was you see this 1.618 expansion. That is an expansion of your C to D leg. That's where my cursor here is pointing out here. That was an expansion of that leg. That means if you just simply took the difference between the high of your B point, your low of your C point, if you took that difference, you went ahead and multiplied that times 1.618, added that to the bottom, that would give you this price projection, or very close to it. You can see you also had a 0.618 retracement out there. And like with any Gartley buy or sell pattern. What you're looking for are places to go ahead and exit. You want to make sure that whenever you set up a strategy, now in this case here, if you would enter the trade here, your stop needs to be, because this is a 0.618 retracement, your stop needs to be at the 0.786 level. That measurement here, let's go take a look at that. We just simply come from our high that we started with, our X point, if you will, that was out at 1.29893. You can see it about 1.29714. So if you had entered this trade, your stop needs to be above that 0.786 area. Why? Because if not, it's just a normal area for an equity to move to. We're going to take a look at, we'll take a look at Apple. We'll see where it moved to off of its swing points, where its next swing point, where its next retracement level would be. The same thing here with regard to understanding retracement levels. So in this case here, what we did get was you got a nice bearish signal here after this Gartley sell pattern. If we take a look at what the exit strategies were, we talked about yesterday there being really 4 exit strategies here, 4 where you would go ahead and you would adjust your stop, in this case here on the way down. Your first level down, the normal level it's going to get to is 0.382. I mean, that's that dead cat bounce area, and that is just simply normal. You might get there and then might bounce back up. But the next level you're looking at is really going to be that 0.618 level. You can see that's right here where my, in fact, let me just change this to a dark color first, and that might be a little bit easier for you to follow. There we go. And then we'll go ahead and expand it out. So the 0.618 level, you can see as the candles are coming in there, no bulls around here, just simply bears. The next level would have been 0.786. It hit that, no bulls showing up. And then you're going to do that 100% move of a move. That, folks, is where if you take a look at the swing points over here on the left, it is just normal for an equity to get there. It is like finishing the race. It is like, using the opening, of the segment today. If at first you don't succeed, try again. And most people, myself included, you might have an outcome in mind, and you just simply go ahead and you stop once you get there. Well, we want to learn from this stock chart here. We want to learn from everything, and you don't really stop there. You might pause. Well, that's what really happens in a market here. This pause, you gave a nice little bullish candle signal as we were on the show yesterday at 9:50. Of course, there was no follow through on that. The ultimate outcome is where the Gartley pattern turns into a new A to B equals CD down. So let's go ahead and get rid of the Gartley pattern. I've got the A to B equals CD down, so we can take a look at that here. Let's so we're going to go ahead and get rid of our Gartley, and we're going to get rid of the Fibonacci level here. Let's clean this chart up. So now we've got our A to B equals CD down. So a lot of times, folks, you can use a Gartley. With a Gartley pattern, buy or sell, what it's really doing, it's really creating potentially that C point of an A to B equals CD up or CD down. In this case here was an A to B equals CD down. You can see that 1-to-1 level was hit. As that 1-to-1 level was hit, no bulls around, still bears. A market bounces around just for a bit. Let me shorten this chart up here. It'll be easier for us to see. So as it got down to the 1-to-1 level, no real bulls in here, and getting down to then the next level is where 1.272 expansion. You start looking for bulls out there. No real bulls in sight here, and it's really with regard to some specific candle signals. That's what I teach. That's what I will be teaching in my upcoming workshop. It's an online one-day workshop. It is next Friday, not this coming Friday, next Friday. That is October the 19th. If you can't be there, it's archived on your members page for 30 days. And it really is, folks, it is the secret weapon of the Orient. It really is about understanding how to use candle patterns. It's not a trading program. It's really being able to use this as a communication language to add to whatever trading program you might have out there. The 1-to-1.27 level being hit this morning. Well, it's actually last night at about 7:50. Again, we're looking at a 10-minute chart. We can see here that you're really trading sideways. Any bullish candles out there of any significance? None yet. Really, if we take a look at what the euro on the short-term charts, what it's doing, just making an A to B equals CD up pattern. That A to B equals CD looks just like that. It is just that simple in drawing A to B equals CD. You can see the euro hit that level and actually did have a bearish candle configure right here, a three-river evening star pattern out there. So now that's your A to B equals CD. That's on the way up. Those patterns, folks, are out there on a continuous basis. Let's go take a look at True Religion jeans. Well, maybe they sell more than jeans out there, but let's go take a look at that stock. That is pouncing up very nicely, up 21% this morning. TRLG. What is going on there? Well, let's see. Says it's bouncing up. I got to refresh my screen here. That's the problem. Okay, there we go. So True Religion jeans bouncing up with volume. What the heck? What is the news? Maybe somebody in the den could find some news out here. I'm not showing any news on True Religion. Just curious as to what might be behind this. Is there any buyout or anything? Okay, True Religion announces exploration of potential strategic alternatives. Geez, I don't really know what the heck that means out there. Maybe you do, but let's take a look at it this morning. Apparently exploring for potential strategic alternatives, which I do on a continuous basis, causes the stock to just absolutely bounce up here. If we take a look at this, you've got this gapping up this morning, 3 million shares thus far, but of course all this is doing is coming into its last gap down area. Well, really two of them. Of course, volume-wise, really not too bad this morning, but this thing here, first breaking down on February 10th out there as the equity gaps down with 5.4 million shares. That was your first real sign of weakness out here. Your second sign of weakness, well, that came in as a gap down on August 1st, and it did it with 3.7 million shares. So this does not, to me, look like an equity that you want to touch. Let's pull this back on a monthly chart out here. I need to refresh my screen. And as we do that, let's see what this thing was doing. Gave you one of those bearish engulfing candles on a monthly basis that was pretty substantial, because what it did was it engulfed. Let's take a look at this. So the engulfing candle takes place February 29, 2012. It engulfs all the sessions going back to May 31st, 2011. That is a stinger for sure. That is on True Religion, the company out there. Let's go take a look here at Google. Google leading the charge on the way down, dollar-wise, off $4 and change. So let's go see what Google is doing. I also see you've got Helen of Troy Corp down 10%. Let me see if I've got Google here. I won't even look for it. Let's just put up the ticker symbol. So Google was at all-time highs. It got over the weekly high, daily and weekly, got over the weekly without volume. I believe it is now back inside that range on the weekly chart. So let's start with the weekly chart first here on Google. Let's see if that is the case. Yes, it absolutely is the case. So let's take a look at Google, because it really has been the strength inside the NASDAQ out here. And so let's take a look and see what it's now. This is the weekly chart. Week isn't over for a few days. But if we do take a look at Google, you go back to the swing point from November 9th, 2007. That high was 747.24 out there. It's trading right now at 739.67. The volume that had on the weekly chart was 53 million shares. You can see that's this red line going across the bottom of my screen there. And you can see nowhere even close to volume as it got over it the week of 2 weeks ago, September 28th. And last week it gets over it, stays over with 13 million shares. Actually broke that area with 22 million shares. So last week even lighter volume out there, and it was not a holiday that I recollect. Was there any holiday last week? No, the only holiday was the banking holiday this week on Monday out here. So now it's trading back inside that range. Now let's go take a look at this on a daily basis, see what it's done daily-wise with regard to any kind of volume out here. Let me get rid of these lines here. In fact, let's just draw the new possible retracements for Google. So we're going to do that off of the swing point low. I'm just going to select the July 12th area, because that's where it really made its run up, that July. You can go back a little further. I'll go back a little bit further for you. Let's go back to where you really see the change in trend out there. That coming on June the 14th out at 556.52 as it makes a high coming into the level of October the 8th out at 763.58. Just a normal pullback on Google. I can get it out here. It would take you back to about the 691 level. If we do take a look at Google, yesterday really not acting that badly. If we take a look at some volume bars out here, if we take a look, not wide price spread or anything on September 21st, but you did have a nice 6.4 million shares. The high of that, it looks like that's going to be tested here. That is 734.92. The next trading session with any volume, you're below that. That happened to be September 25th. Next trading session with any volume was also, that's here, right here. You're looking at September 26th. That low, 741. Even, Stephen, you're at 740.19. So, volume-wise, on the way back here. Yesterday, 3 million shares. Really not that big of a deal. So Google actually looking pretty strong out here, even on the pullback. Let's go take a look at the Let's go take a look at bonds. James Bond out here, because certainly some divergence in the marketplace. Yesterday with the Dow being off 100 points, the market being down pretty good. If we take a look at bonds, really not doing much. You would have expected bonds to really move higher, and they absolutely didn't do that. What we are seeing with bonds, you can see we've got 3 lower highs, and really if we take a look at lows, you don't have you get 2 lower lows. Okay, so we get 2 lower lows. I should take that back. Get 2 lower lows. And what we're taking a look at here on the chart, I'm taking a look at this really large ascending wedge pattern. It's got a long time before this thing completes. But, to me, that actually kind of makes sense with Uncle Ben out there in the bond market. Says it's only going to, he's going to reassess, I believe, come the end of the year out there. But with Uncle Ben being in the bond market, I suspect that what we'll really see is bonds travel in a sideways trading range for the time being. And yesterday was a pretty good signal of that, because bonds basically barely moving. You would have expected bonds moving to the upside. Same thing today. You got bonds trading down at 147.21. Not a lot of movement out there. Nothing that would correlate to the market. Another piece of news out here. Not news, but if we just simply take a look at the stock charts, let's go take a look at light sweet crude. Light sweet crude yesterday, with the dollar being up big, certainly not backing off at all. In fact, moving to higher ground. Of course, light sweet crude really is struggling, even though yesterday was a positive day. But it was a disconnect in the markets. King dollar. What is King dollar doing? King dollar trying to break that trend line. 877-927-6648. Dow's off 32. Composites up 2. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, the Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Catch Tom O'Brien and Steve Rhodes as they teach you the art of mastering money when it comes to trading and investing. The Money Masters, next on TFNN.
Welcome back, folks. Relatively flat market out here with the exception of the Dow. You got the S&Ps off a 1.5. Composite down 20 cents. Russell down 20 cents out here. So let's go take a look inside the Dow, see what we've got here that is leading this down. You've got Chevron off $3 and change. We'll go take a look at Chevron. Caterpillar right behind it down $1.50. United Technologies, UTX off 75 cents. IBM down 22 cents. Merck off 30 cents. Alcoa down 29 cents. On the upside, you've got Walmart up $1.05. McDonald's up 83 cents. JP Morgan up 32. Let's go start with Chevron. CVX is the ticker symbol. See what is going on inside Chevron up here. Ooh, gapping down. That is does not look good. What was going on? I don't have the news here. But in the case of Chevron, we can see, well, let me refresh my chart here. I had a little data feed problem, so I can't jump to conclusions here. Let me see. So yesterday, October 9th. So it is gapping down here. If we take a look at, let me just erase some lines out here. So let's go take a look at yesterday. Yesterday, this thing closes out at 117.36. You're trading at 114. Volume-wise, decent volume in it so far this morning for 25 minutes of trading. 3 million shares out here. The swing point that this could be trading into is all the way down on September the 5th out here. That swing point only has 4.4 million shares. So Chevron now has some juice coming out of it. Let's go take this back here. And, you know, it's got an area where we can see here, if you take a look at I'm just going to draw a line across here, and then I'll just go ahead and move it, just so you get kind of a decent indication here. Let's see. There we go. Okay. So if we take a look at this line here, we can see where you've got really an area. I'm going to call them moving it up and down, as you can see. So you've really got kind of a little area here that should act as a support area. That support area also is going to be right along the bottom of that swing point from September 5th. So as Chevron moves back there, if it's moving back with more than 4 million shares, then the next level on this really does, takes you pretty much all the way back into the June 6th area, which is all the way down at $97. It's at 113 right now out here. So expect the area, this black line, really the swing points in the level of September 5th to be the next area to give you any kind of information. The information right now does not look good on Chevron out there. Let's go take a look at United Technologies. I haven't looked at that stock chart here for a while. UTX is the ticker symbol. They're number 3 dollar-wise on the way down. Looks like it is taking out a swing point here. Let's go see if it's doing it with volume. So that would be setting up your B point. Now, the swing point I'm looking at, folks, is September 28th. 6 million shares. Thus far today, 476,000 shares. So if this does take its trading below there, if it takes it out with volume, you would have a confirmed A to B equals CD down on United Technologies, and it would be a doozy because as we take a look at the retracement out here, not really much of a retracement. That would say 72.10 in my work would be the target. If we take a look at the retracement from the A point to the B, That will give us our B to C retracement. You can see only a 0.382 retracement, so not much. So United Technologies is pretty important to watch today, I would think, to see if it's got the volume. It's got to take out 6 million shares. It has done, as I say, 482,000 in the first 30 minutes. So that would say it's going to be close call on United Technologies. Stay tuned, folks. Tom and I will be up next for the Money Masters. And then as we do on each Wednesday, we go up to Basil Chapman from 11 to 12. Basil will be pulling double duty today. He is going to do a doubleheader. He'll be filling in for Larry from 12 to 1. Daryl Martin, 1 to 2. David White, 2 to 3. Ken Shreve, 3 to 4. And the Master, Tom O'Brien, from 4 to 6. Have a great morning, folks. Look forward to seeing you soon.